Hello everyone, my name is Riley Pollard and I'm a junior in the AIM program covering International Consumer Discretionary. Today I will be pitching Nestle, ticker NSRGY. Nestle is a multinational nutrition, health, and wellness company primarily engaged in the production of food and beverages. Their diverse portfolio includes products categorized within the following segments: powdered and liquid beverages, nutrition and health science, pet care, milk products and ice cream, prepared dishes and cooking aids, confectionery, and water. Nestle was founded in 1905 from the merger of the Anglo-Swiss Milk Company and Farine Lactee Henry Nestle and is headquartered in Vevey, Switzerland. Now, onto my recommendation. Nestle is Europe's largest company by market value, over $300 billion. Their portfolio consists of well-known brands such as Gerber, Perrier, Cheerios, Kit Kat, Hot Pockets, Haagen-Dazs, and Purina. In fiscal 2019, Nestle saw organic net growth of 3.5%, with full-year net profit rising 24% to 12.6 billion Swiss franc. The US, which accounts for over 30% of Nestle's total revenue, saw 4.1% organic growth in fiscal 2019, its highest in the last 10 years. Since the appointment of a new CEO in 2017, Nestle has streamlined its diverse portfolio in line with changing consumer tastes. They have sought to focus on premium products in fast-growing market segments, such as coffee and plant-based food, while retreating from slower growth areas like chocolate and processed meat. Conducting more than 50 transactions in the last 3 years, Nestle has invested in higher growth, higher margin businesses that are on trend with younger, affluent consumers. Nestle unveiled their Starbucks line in late 2018, plant-based Impossible and Awesome burgers in 2019, and their just-announced acquisition of Lily's Kitchen, a natural pet food company, to name a few. This innovative focus grew their premium product offerings, representing 26% of total sales, by 7.4% in fiscal 19. Nestle returned nearly 17 billion Swiss franc to shareholders in 2019 through share buybacks and dividends. Management is also planning a dividend increase of 0.25 Swiss franc in April, which would mark their 25th consecutive annual dividend increase. For these reasons, it is recommended that Nestle be added to the AIM International Equity Fund with a price target of $128.94, representing a potential upside of 19.73%. Now, I will move on to my drivers. My first driver is Pampered Pets. Nestle's Purina Pet Care portfolio includes the Pro Plan, Purina One, Gourmet, and Merrick names. Pet care accelerated to a 7% organic growth rate and was the largest contributor to Nestle's overall organic growth, along with beverages, in fiscal 19. Their e-commerce channel grew by over 40% and now generates more than 10% of all total Purina Pet Care sales. Nestle has also shown strong sales development in science-based premium brands such as Purina Pro Plan, with the recent launch of a supplement helping dogs maintain calm behavior, and Purina One, with a new line of cat and dog food that strengthens immune and digestive health. Tidy Cats, the #1 litter brand in the US, recently launched Naturally Strong, a 100% natural product with no additives. Purina Pet Care saw double-digit growth in Latin America in fiscal 19, and Tails.com, a tailor-made dog food and nutrition company in Europe in which Purina has a majority stake, grew above 50%. Consumers are taking a personalized approach to pet care, and Nestle has positioned themselves to take advantage. My next driver is coveted coffee. Along with pet care, beverages contributed the most to Nestle's organic growth in fiscal 19. In a $7.15 billion deal that closed in August 2018, Nestle entered into a global coffee alliance with Starbucks. This deal granted Nestle the right to market, sell, and distribute certain Starbucks coffees and teas at retail and food service. Since mid-2018, the product has been rolled out in more than 40 countries and contributed more than 300 million Swiss franc in incremental sales in 2019. Nestle plans to extend their Starbucks presence to 50 markets by the end of this quarter. Innovation under the Starbucks label is strong, with Starbucks Creamer hitting stores in July 2019. Nespresso also saw double-digit growth in the US in fiscal 19 with assistance from Starbucks by Nespresso Pods. The iconic Starbucks name has provided iconic growth prospects for Nestle. My third driver is plant-based power. Sales of Nestle's plant-based products are growing at strong double digits and look to be accelerating. In 2019, their Sweet Earth Awesome Burger, which is yellow pea based and sold in the US, and Garden Gourmet Incredible Burger and Incredible Mints, which is soy-based and sold in Europe, reached sales of close to 200 million Swiss franc. In August 2019, Nestle launched 3 plant-based lattes under the Nescafé Gold name, appealing to the growing number of non-dairy drinking consumers. And in December 2019, Nestle Brazil introduced Nino Forti, an oat and pea-based drink formulated specifically for school-aged children, and in March 2020, Nestle Australia introduced a plant-based version of their iconic cocoa malt beverage, Milo. Nestle has a stake in the growing market for health-conscious consumers. Now I will move on to my valuation. In order to reach an intrinsic value for Nestle, I constructed a 5-year DCF model. Using a terminal growth rate of 1.75% and a WACC of 5.33%, I reached an intrinsic value of $143.82. A sensitivity analysis of plus minus 50 basis points on the terminal growth rate and the WACC ranged from $114 to $196. Furthermore, a PE evaluation was completed using a pure PE multiple of 23.14 times that reached a relative value of $100.24. And finally, an EV/EBITDA multiple valuation was constructed using an EV/EBITDA multiple of 17.68 times that resulted in a relative value of $113.01. By weighing the 3 models 60, 20, 20, a price target of $128.94 was reached, representing a 19.73% upside. Nestle currently pays a dividend yielding 2.2%. Next up is risks. The first and main risk that Nestle faces is COVID-19. The Greater China region, where COVID-19 hit first and hard, accounts for about 8% of Nestle's revenue. Nestle will be impacted by the effects of COVID-19 in that region as well as globally. The second risk is the strengthening of the Swiss franc. The Swiss franc has been strengthening against Nestle's major currencies, particularly the US dollar. In fiscal 2019, foreign exchange reduced sales by 1.5%. Further strengthening of the Swiss franc could have a similar effect on sales in 2020. The last risk has to do with water. Water, which represents 8% of Nestle's sales, has struggled with consumer transition away from single-use plastics. Nestle has invested substantially in plastic waste reduction initiatives in an attempt to cater to changing consumer preferences. Last is management. Mark Schneider was appointed CEO of Nestle in 2017, becoming the first outsider to lead the company in nearly a century. Prior to Nestle, Schneider served as CEO of Fresenius Group, a $28 billion global healthcare group, from 2003 to 2016. Since taking the reins, top-line growth has accelerated, margins have improved, and more than 50 transactions affecting 12% of group sales have taken place. Thank you for listening, and I look forward to any questions you may have.